Hello, this is Ahura. We'll be with you with the global economic outlook in the week ahead, week 3 of 2026. First of all, I should apologize for my voice. Still not feeling so good, so maybe if I have something with my voice, I apologize at the beginning, at the very beginning. Week ahead will be a very important week with the World Economic Forum in Davos, which will be, as you know, one of the biggest, or we can call it the biggest economic forum of the year with too many bankers, central bankers, governors, and most financial markets and investors, top financial market leaders, investors, and traders. And they're coming together from the January 19th till 23. From Monday till Wednesday. That will be very important to watch. Any news comes out of that. Maybe it will not affect the market right away, but generally it will affect the market in a mid and long term. It will be very important for general financial markets. Maybe not good, not so much important for the trades, but very important for investment. However, before starting talking about the week ahead, let's first have a short review on previous week. Last week we had geopolitical tension at the center of stages, as you know, especially with the ongoing revolution in Iran, where the people are fighting for their freedom. And now it's the 10 days that the people inside Iran, they have no internet, no connection, and we should be their voice across the world to talk about the ongoing revolution in Iran and explain to everyone across the world what is happening there and how the genocide somehow is going on, where the media says more than 23,000 killed and 330,000 injured, with more than 8,000 people that they lost at least one of their eyes. So that's really the genocide, when the people are coming for their freedom, for their basic rights, and like the government stays against them and killing the people in the streets. And even not just in the street, they're just in the hospitals. Generally the genocide is really, we can call it a genocide. And I think it's better to follow the news in X, social media platforms such as X and Instagram, especially websites, and a different website. You can search about that and try to be a Iranian voice across the world where you are, and tell everyone that what's going on in Iran, let be their voice while they have no internet and no connection, generally no phone, no message, nothing, no connection with the world out of the country. This geopolitical tensions in the Middle East affected the market as well, especially the energy and oil market, while at the end of the week, I will explain on the chart what happened, mostly about that. At the same time, we had the geopolitical tensions about the Greenland as well. The US is still pushing to take the Greenland, take over the Greenland, while European countries are China. China is not involving so much, but the US wants to explain that China is involving in Greenland as well, but generally the China is not involved too much there, but the US trying to use it as an excuse to take over the Greenland. However, the tariffs that President Trump put on the countries that they are moving against his idea for to take over the Greenland. So the tensions in that area also increase generally the market risk. Besides that, on the economic data, we had a very good week. Started with especially Tuesday with the US inflation. When we saw the inflation is improved less than expectations, but repeated the same numbers of the previous month, November, in December as well. Generally at 2.6% and 2.7% for headline and core inflation. We saw the same numbers, and that says that inflation is still sticky. Even thought it didn't increase, but at least we can say that even thought it not increase, but it is in line with expectations. It is repeating the same numbers, which means that inflation is sticky, and that can increase the idea of the holding the current rate for a little bit longer or higher for longer idea. And other data that we had from the United States also covered and confirmed this idea, because new home sales, existing home sales, initial labor, sorry. initial jobless claims and continuing jobless claims. All this data generally we had from United States, Empire State manufacturing activities, Philadelphia manufacturing activities. All these numbers, they were better than expected, and generally bring that idea, the thought that U.S. economy is still moving forward, and they can tolerate that higher rates for a little bit longer. So the market is still counting on higher for longer. This is from United States. I have to mention, especially the initial jobless claims fell under 200,000 claims, 198,000. That was amazing, surprising. In China, also, we had a very great numbers of the trade data. Export increased by 6.6% in December, and imports 5.7%. While the 2 weeks ago, we had a data 2 weeks ago, that numbers that we had 2 weeks ago, that inflation showed there was 0.8% increase in December. Now we can see the data that demand also increased with the imports, higher imports at 5.7%. That says generally the Chinese economy is also started to giving some positive sign and signals. That was what generally happened previous week. But and this idea that changes increased the expectations for holding the current rate to 95% for United States in the next Fed meeting, while it was around 70%, 70 and 80%. Even that for March, for the meeting at the March also, it increased, the holding the current rate increased to more than 78%, while it was around 50-60%, like just like a few weeks ago. Looking at these, I mean, while we should remember or considering these numbers, we can talk about the week ahead as well. This week will be again very important week in China, in Japan, United Kingdom, and also especially in United States with the PC price index and core PC price index, generally the personal income spendings. Starting with Monday in China, where we are expecting to see the GDP grow for the fourth quarter around 5%, 5.2% around these numbers. If so, we can generally think about that the overall, that's for the fourth quarter. Then we can conclude the numbers around 4.7% till 5% GDP growth for the 2025 of the Chinese economy, which can be the good news. I mean, they could somehow reach what they wanted. At the same time, we have the Chinese industrial production and also Chinese fixed asset investment, and all these numbers are expected to show the better data, which like around like a 5.1% for industrial production growth. That can tell us that generally the Chinese growth is fine. I'm talking about the 5% for the GDP. I mean here today, but for the whole, just like for the whole 2025. For the fourth quarter, generally we're expecting around 4.5% GDP growth, but generally together for year to date, I mean, for the 2025, between 4.7% till 5% economic growth, we can probably see, and we can say that the Chinese, they could reach their economic growth, expected economic growth that they were putting as their goal at the beginning of the year. On Monday, we will have the inflation numbers from Europe. We are not expecting to see any surprise. Core and headline inflation, both of them, they're expected to increase by 0.2%, which means the headline inflation in the annual scale will be at 2%, and core inflation unchanged at 2.3%. No surprise there. But with the weaker economic growth, that idea of the cutting another rate cut for European Central Bank is again coming to the market's conversations. We will have the inflation numbers from Canada as well. The market expected to see 0.4% falling inflation in December. With this slower inflation in December, we expect to see the whole the annual inflation of the Canadian inflation slightly ease to 2.7, 2.8% from previous 2.9%. Tuesday, again, we're gonna start with the Tuesday from the China, with the Chinese central bank's monetary policy meeting and interest rate decision, where we are expected to see the 1 year and 5 year loan prime rates to stay unchanged at 3 and 3.5%. But the Chinese central bank, the policymakers generally gave this promise to the market that they're gonna have more dovish policies. So we're gonna see, we'll be waiting to see what is going on there, what will happen. But generally, we're expected to see a little bit dovish tones from the Chinese central bank's meeting. On the same day, we will have the from United Kingdom also, we'll have the labor market data where we're expecting to see unemployment rate to slightly ease to 5% from previous 5.1%, while the average income, including bonuses, should increase by 4.6%. But generally, these ideas even thought that we're going to have a little bit better labor market data later in the week. We're going to have the inflation numbers, and we are expecting to see the December inflation at 3.3%. But generally, these ideas cannot change the market expectations for another 25 basis point rate cut for BOE February 5 meeting. The BOE will have monetary policy meeting in February 5, the fifth day of the February, and we're expecting to see another 25 basis point rates cut. This is the Wednesday, as mentioned, the inflation also, the British inflation is supposed to be published on Wednesday. And then we're going to have the important day on Thursday, where we expect to see important numbers from United States, especially with PC price index, and generally the income and spendings. Personal spending supposed to increase by 0.5% and income by 0.4%, while the core PC price index and PC price index, both of them, the headline and core PC price index, supposed to increase by 0.2% on the monthly base, which means the core PC price index will remain unchanged at 2.7% and headline inflation at 2.8%. These numbers means that inflation is still sticky, and the markets should still count again on a higher for longer if we see the same numbers again, repeating the same numbers again, especially where while we expect to see the continuing jobless claims and initial jobless claims again in strong levels with the 203,000 only for initial jobless claims. This week on Monday, we're going to have the holiday in United States. Don't forget about that for the Martin Luther King Day. And finally, Friday, we're going to have the Japanese Central Bank meeting where we expect to see BOJ to hold the rate at 0.75%. No change there. But with the ongoing political tensions, most probably we're going to have the elections soon in Japan, while the wages expectations for the spring changes for the wages in Japan. We are expecting to see some tensions about the wages as well. Generally, this idea bring this one side, and on the other side, we have Japanese yen in very low levels in the recent months, which can increase the inflation because when you have the weaker currency, so it means that your imports will be more expensive. When you have, especially for the Japanese factories, where you have energy and also the raw materials more expensive, you're going to have the higher prices for selling as well, and that increases the inflation, which means these risks are there, and the Japanese central bank should make a decision. And that's why we expect to see at least 25 basis point rate hike in 2026 generally, and probably we're going to have 2 more rate hike in 2026. So, but it's not going to happen in January, but most probably we're going to have the rate hike in March BOJ meeting later this year. Retail sales in the United Kingdom also will publish on Friday, where we expect to see no change in retail sales. The flat retail sales in December. That's why the market says that with the weaker retail sales, while we're going to have, we had already weaker economic activities in recent months. That's why we say that central bank in the United Kingdom going to cut the rates by 25 basis points in its February 5 meeting. Friday, we're going to have the manufacturing and service PMI numbers, the flash numbers for January, and we generally expect to see while the manufacturing sector is supposed to slightly increase, service sector is expected to be a little bit weaker, and that's the market risk, which we're going to see how the market going to react these numbers. But generally, from most economies, we expect to see, including the United States, we expect to see slightly better manufacturing sector growth, but service sector is supposed to be weaker. Considering this geopolitical tensions, economic data that we already had and going to have, let's check the markets, how the market reaction was going to be to these numbers. About the earnings reports also, I will talk when we go to the stock market charts. As about the geopolitical tensions, especially in the Middle East and Greenland, that increased the market risk, especially from the second half of the previous week. Well, while the market at the beginning, market risk was VIX was under 16 at the very beginning of the week. Later, the week ended by 18.50, which means that the market risk is so high. That higher risk in the market increased the demand for the dollar index as well. That's why we saw the dollar index increasing, sorry, the dollar index increasing above 99 and ending the week at 99.20. Generally, we expect to see with the expected economic data and geopolitical tensions around, we expect to see the dollar index to be able to save and to be able to hold its gains across the week. In the week ahead as well. So that's why we say that, okay, the dollar index above 98, 99 will be at the expected levels for the week ahead as well. That's increased the demand, this higher risk in the market, while the dollar index also is expected to be strong. Again, we expect to see the safe havens, especially the gold at the demand. So that's why I even thought from the all-time high, we had slightly backdrop at the last 2 or 3 days at the previous week, but still the bigger picture for the safe haven still didn't change. The dollar, the gold is still in the demand. Same things we can expect for the silver as well. The gold and silver, they are still in the demand. I mean, we're gonna have to tolerate, especially if the geopolitical tensions in the Middle East increase, because there are the conversations and the talks, the many whispers around the new tensions between the Islamic Republic based in Iran and the United States. That can increase the market risk. And when you see the higher risk in the market, you can expect a more higher demand for the safe havens, including the gold as well. About the energy market, in the week ahead, we're going to have a monthly report for the EIA, IEA, and OPEC reports, monthly reports as well. Still, what we expect to see from these reports are to see, we expect to see that they confirm again the more support, more supply than higher supply than demand. That can increase, that can put the pressure in the prices and increase the idea of overloaded in the market. So especially when we know that the US already is controlling the Venezuela oil and we will not have too much problem for the supply in the market. That's why the market generally are negative about the oil price. However, if we see the higher risks in the market, especially in the Middle East, it's dependent on how the geopolitical tensions between the United States and Islamic Republic based in Iran, how this geopolitical tensions between these two is going on, how deeper we're going to have and how higher tensions we're going to have, that much we're going to have the more demand for the silver, for the oil price as well, the higher prices. But if we see the tensions lower, or if we do not, if we say that, or if they have some tensions, but it's not spreading too much across the Middle East, and they can somehow finish the tensions inside the Iranian border, that means that most probably we will not have higher prices for the oil. So excluding the geopolitical tensions, the oil price is negative. Same thing for the gas price as well. But including the geopolitical tensions, it's dependent on how that geopolitical tensions will go. So it's not something that we can say, okay, that's what we can expect to see as a prices. So it's dependent already to the news headlines. In the stock markets, last week we had a first week of earnings. The earnings generally they were fine, not so good, not bad. They were fine. That's why the market had a negative. But the market somehow had a natural reaction to these numbers. But for the week ahead, we're gonna have more earnings, especially from the tech groups. And that can increase the positive reactions in the market, because the tech companies most probably they're going to have the better idea, so they can support the market, they can support the prices. However, what's very important to see here is again the geopolitical tensions. Again, the geopolitical tensions, they can have a negative effect in the stock markets as well. However, as mentioned, the geopolitical tensions is not something we can say, okay, this is what's going to happen or not. It's all dependent on the headline. We cannot somehow have a clear perspective of what's going on there. Follow the headlines, the news headlines, but on the economic side, from the economic side, we can say that we are generally natural with the slight positive expectations, just like what's our expectation. That's the same thing for S&P 500, Nasdaq, and Dow Jones as well. in the cryptocurrency market, Bitcoin finally could support the 95, could help the could hold the $95,000, the first most one of the most important resistance. So now the 95,000 becomes a support, and if it can hold this support and increase above $97,000, we can say, okay, the Bitcoin is already starting the new uptrend. But the any uptrend again, I have to mention, any uptrend technically starts about 97,000. That's technically, but fundamentally, it's depend on the new there is a the new the two things can move the market for the cryptocurrency market. One is a regulation. This is the new structure for the cryptocurrency market. In the Senate, we're gonna have what's gonna happen for that. Now the Coinbase and some crypto exchange companies, they are against of this structure, but that's dependent. That's dependent on the market. But most probably the market will have a positive reaction to that because most probably Senate will prove that structure. The other one is the ETFs. We had a more income in the ETFs inflows because in the previous weeks we had outflows from the ETF markets, but previous week in the last days we had more income inflows to the ETFs that supported the market. So you have to follow this, but generally we are positive. Generally, the market is positive about the cryptocurrency market, especially for the Bitcoin. And if technically also we saw the price above 97,000, we can be more positive about the higher prices and new upturn again. That was what happened previous week and what we're expecting for the week ahead. Hope it was useful for you. Talk to you again next week. Have a good day. Bye bye.